The United Arab Emirates has become the largest state-backed investor in Africa. Not China, not the United States, not France or Britain. The UAE, a country with a population of 10 million and a landmass smaller than Portugal, now controls more African infrastructure than any other foreign power. This isn't visible empire. There are no occupying armies, no colonial administrations, no flags planted on government buildings. The UAE's power in Africa is built through something more durable than military force. It is built through infrastructure, ports that control trade flows, power plants that determine who has electricity, logistics networks that move goods across continents, financial systems that decide which projects get funded. The UAE doesn't control African governments. It controls the systems those governments depend on. This is the money timeline. Today, we're going to examine how the UAE is quietly taking over Africa. We'll look at why a small Gulf state is investing hundreds of billions in a continent 5,000 miles away, how it builds control through ports, energy, and finance, where its grip is strongest, and why this matters for the future of global power. This isn't about development aid or partnership. This is a strategic power grab executed through infrastructure. The UAE's massive investment in Africa is not charity. It is not corporate profit seeking. It is strategic positioning for long-term national survival and regional dominance. Africa sits at the intersection of the world's fastest population growth, the most critical shipping lanes connecting Europe and Asia, and future demand for energy and resources. For the UAE, a small state with limited domestic markets and an economy still heavily dependent on oil revenues, long-term security requires controlling access to trade routes, food supply chains, and energy flows beyond its borders. The UAE has no territorial depth. It cannot expand its geography. It cannot rely on a large domestic market to sustain growth. And it knows that oil will not fund its economy forever. The solution is to embed itself into the infrastructure of regions that will matter in the 21st century. Africa is the primary target. Africa's population is projected to reach 2.5 billion by 2050. That is massive future demand for energy, food, manufactured goods, and services. Whoever controls the infrastructure that serves that population gains enormous economic and political leverage. The UAE is positioning itself to be that power. Geographically, Africa controls access to some of the most important maritime choke points in the world: the Suez Canal, the Red Sea, the Gulf of Aden, the Strait of Bab el-Mandeb. These routes carry roughly 30% of global container traffic and are critical for energy flows from the Middle East to Europe and Asia. Controlling ports and logistics infrastructure along these routes gives the UAE influence over global trade. There is also a diversification strategy at work. The UAE has built itself into a global logistics and finance hub, but it needs assets and partnerships that cannot be easily disrupted by shifts in global power. By anchoring deeply into African infrastructure, the UAE reduces its vulnerability. If energy markets shift, if regional conflicts escalate, if Western or Chinese dominance changes, the UAE has alternative sources of influence and revenue. Finally, there is a hedging strategy against great power competition. The UAE operates in an environment where the United States, China, Russia, Turkey, and European powers all compete for influence. By establishing itself as the indispensable infrastructure partner in Africa, the UAE becomes valuable to all of them. It can facilitate Chinese projects, provide logistics for Western operations, and maintain independence in ways larger powers cannot. Being essential to everyone is its own form of power. Africa offers scale, strategic geography, and influence. For the UAE, investment in African infrastructure is not optional. It is existential. The UAE's strategy operates through three interconnected systems: ports and logistics, energy infrastructure, and finance. Each reinforces the others, and together they create dependency that is difficult to reverse. Ports are the foundation. Through DP World, a Dubai-based company that is effectively an extension of UAE state power, the UAE operates or controls key ports across Africa. These include major facilities along the Red Sea, the Horn of Africa, the East African coast, and strategic locations in North and West Africa tied to Atlantic and Indian Ocean trade. Ports are not just physical assets. They are control points. Whoever operates a port controls customs procedures, shipping access, import and export flows, and supply chain logistics. Once the UAE secures a port, it gains leverage over the entire surrounding economy. Governments become dependent on UAE-managed infrastructure to move goods in and out of the country. DP World's strategy is to acquire long-term operating concessions, often 30 to 50 years. These agreements give the UAE operational control over critical infrastructure for decades, regardless of changes in local government or political conditions. The UAE builds, operates, and extracts revenue while the host country provides land and access. It is a modern form of concession imperialism, but structured through commercial agreements rather than colonial treaties. The UAE's port network also creates strategic depth. By controlling multiple ports along the same trade routes, the UAE can shift traffic, redirect shipments, and influence regional trade patterns. If one government becomes uncooperative, the UAE can route trade through another port. This gives it negotiating power and insulates it from political risk in any single country. Energy infrastructure is the second pillar. UAE-backed companies, particularly Masdar, invest heavily in power generation across Africa. This includes solar farms, wind projects, hydroelectric plants, and grid infrastructure. The model is similar to ports: long-term concessions, operational control, and revenue extraction. Energy infrastructure is particularly powerful as a control mechanism because it becomes essential to national functioning. When a country's electricity grid depends on foreign-built and foreign-operated power plants, the host government cannot easily nationalize or replace those assets without causing blackouts and economic disruption. Energy dependence creates political leverage. The UAE also benefits from the shift toward renewable energy. Western governments and international institutions prioritize climate financing, which makes renewable energy projects easier to fund and politically defensible. The UAE positions itself as a green energy leader while building infrastructure that gives it strategic control. It is a brilliant combination of commercial interest, political positioning, and long-term leverage. Finance completes the system. UAE sovereign wealth funds and state-linked banks provide capital where Western financing is slower, more conditional, or politically constrained. African governments often face difficulties accessing capital from traditional sources due to credit ratings, political risk, or conditionality attached to loans from institutions like the World Bank or IMF. The UAE offers an alternative. Financing is fast. Terms are flexible. There are fewer political conditions. But the trade-off is long-term concessions, operational control, and influence over national development priorities. The UAE doesn't need to impose conditions directly because it gains leverage through the infrastructure itself. This three-part system, ports, energy, finance, creates a self-reinforcing cycle. Ports generate revenue and trade dependence. Energy projects create essential infrastructure. Finance enables both while locking in long-term agreements. Each element strengthens the others, and together they give the UAE quiet but durable control. The UAE's influence is most pronounced in regions where geography, political fragility, and capital scarcity intersect. These are the places where infrastructure investment translates most directly into strategic control. The Red Sea and Horn of Africa are the core of UAE influence. The UAE operates or has stakes in ports in Djibouti, Eritrea, Somalia, and Sudan. This region is critical because it controls access to the Suez Canal and the Bab el-Mandeb Strait, through which a significant portion of global trade and energy flows past. Djibouti is particularly important. It hosts military bases for the United States, China, France, and Japan. It is one of the most militarized small countries in the world. The UAE's presence in Djibouti's port infrastructure gives it a foothold in a strategic hub where great powers compete for influence. The UAE doesn't need a military base when it controls the infrastructure that supports everyone else's operations. In Somaliland, a self-declared but unrecognized state, the UAE has invested heavily in port development at Berbera. This is a long-term play. Somaliland seeks international recognition, and the UAE's investment gives it leverage over Somaliland's future. If recognition comes, the UAE will already control critical infrastructure. If it doesn't, the UAE still benefits from a strategically located port that operates outside the formal oversight of international institutions. East Africa is another zone of heavy UAE engagement. Ports in Kenya, Tanzania, and Mozambique have all seen UAE investment. These locations connect African markets to Indian Ocean trade routes and provide access to landlocked countries in Central and Southern Africa. Controlling these ports gives the UAE influence over regional trade flows and supply chains. North Africa and West Africa are less dominated by the UAE than the Red Sea region, but investments are growing. Morocco, Egypt, and Senegal have all received UAE financing for energy and infrastructure projects. These investments position the UAE in regions where European influence is traditionally strong, giving the UAE a foothold in markets it can expand over time. The common thread is strategic geography. The UAE focuses on locations that control trade routes, connect markets, or provide access to resources. It avoids dispersed, low-value investments. Every project is chosen for its long-term strategic return, not short-term profit. In fragile states or countries with limited access to capital, the UAE's approach is particularly effective. Governments desperate for infrastructure investment accept terms they might otherwise resist. Long-term concessions, operational control, and reduced sovereignty become acceptable trade-offs when the alternative is continued underdevelopment. This is where infrastructure becomes power. The UAE doesn't need to control governments directly. It controls the systems governments depend on to function. The UAE's strategy in Africa is not designed for short-term financial returns. It is designed for durability, strategic positioning, and irreplaceability. Infrastructure assets last decades. Ports operate for 50 years or more. Power plants last generations. Once built, these systems become embedded into national economies. Replacing them is costly, technically complex, and politically difficult. This gives the UAE leverage that persists regardless of changes in government, political alignment, or economic conditions. The UAE's approach also avoids the backlash that often accompanies overt imperialism or ideological influence. The UAE does not impose political systems. It does not demand regime change or democratic reforms. It does not lecture governments on human rights or governance. It positions itself as a neutral, pragmatic partner focused on development, efficiency, and speed. This neutrality is strategic. It allows the UAE to work across regimes, political systems, and international alignments. The UAE operates in countries aligned with the West, countries aligned with China, and countries that maintain non-aligned positions. It provides infrastructure to democracies and autocracies alike. This flexibility is a strength that larger powers, constrained by ideology or geopolitical rivalry, do not have. The UAE also benefits from speed. Western infrastructure projects often take years to approve, involve extensive environmental and social impact assessments, and come with political conditionality. Chinese projects are faster, but increasingly face debt sustainability concerns and political backlash. The UAE operates at a middle speed, faster than the West, less politically controversial than China, and with financing that appears more flexible. By embedding itself into Africa's physical and economic foundations, the UAE becomes difficult to replace. Even if a future government wants to reduce dependence on UAE infrastructure, the cost and complexity of doing so create enormous inertia. Ports cannot be easily relocated. Power grids cannot be quickly rebuilt. Long-term concessions create legal and financial barriers to nationalization or renegotiation. The UAE's long-term plan is to be indispensable, not dominant in the traditional sense, but essential. Whoever wants to operate in Africa, whether Western governments, Chinese firms, or regional powers, will need to work with or through UAE-controlled infrastructure. That is structural power, and it is more durable than military occupation or political alliances. Western countries have slowly recognized the scale of UAE influence in Africa, but their response has been limited and fragmented. The United States and European nations still view Africa primarily through the lens of competition with China. Massive attention is focused on countering China's Belt and Road Initiative, addressing Chinese debt diplomacy, and limiting China's strategic footprint. The UAE often operates below this radar because it is seen as a partner, not a rival. But the UAE's infrastructure control creates the same dependencies and strategic vulnerabilities that Western governments worry about with China. The difference is that the UAE is a smaller player, presents itself as neutral, and maintains close ties with Western powers. This makes it harder to frame UAE influence as a threat. Western infrastructure financing also cannot compete on speed or flexibility. Projects funded by Western development banks or multilateral institutions face bureaucratic delays, environmental reviews, and political conditionality. These processes exist for good reasons: transparency, accountability, sustainability, but they make Western investment slower and less attractive to governments seeking rapid infrastructure development. China competes more directly with the UAE, but often the two complement rather than confront each other. The UAE can act as a regional financier or operator for Chinese-built projects. It can provide logistics and port access that support Chinese trade routes. In many cases, the UAE and China are partners rather than rivals, which strengthens both. African governments are divided in their response. Some welcome UAE investment for its speed, scale, and lack of political conditions. Leaders facing capital scarcity, infrastructure deficits, and pressure to deliver development see the UAE as a solution. Others quietly worry about sovereignty, long-term concessions, and dependency. Once critical infrastructure is foreign-owned and foreign-operated, reversing course becomes extremely difficult. But these concerns are often outweighed by immediate need, political pressure to show results, and the lack of viable alternatives. There is also limited public awareness. UAE infrastructure projects do not generate the same headlines or political controversy as Chinese debt traps or Western military interventions. The UAE operates quietly, signs commercial agreements, and avoids overt political interference. This low visibility is strategic. It allows the UAE to build influence without triggering backlash. The result is that the UAE's grip on African infrastructure continues to tighten with relatively little resistance. By the time the scale of dependence becomes clear, the systems are already built, the concessions are already signed, and the leverage is already established. The UAE does not control Africa through force, conquest, or direct rule. It controls leverage. By owning and operating the systems that move goods, generate power, and finance growth, the UAE gains quiet but durable influence over economic and political outcomes. This is not traditional imperialism. There are no governors, no occupying armies, no formal colonies, but the effect is similar. The UAE extracts value, shapes economic policy, and gains political influence through infrastructure rather than sovereignty. Infrastructure is architecture in the literal and strategic sense. It shapes how economies function, how trade flows, and how development happens. Whoever designs and controls that architecture holds power, even if they do not hold territory. The UAE has executed this strategy with precision. It identified regions where infrastructure deficits and strategic geography align. It invested heavily and moved quickly. It secured long-term concessions that lock in control, and it positioned itself as essential to everyone. Neutrality as strategy, making it difficult for rivals to displace or challenge. For Africa, the consequences are complex. Infrastructure development is desperately needed. Ports, power plants, and logistics networks create economic opportunity, jobs, and growth. The UAE's investment addresses real needs. But the trade-off is dependency. Long-term concessions reduce sovereignty. Foreign control over critical infrastructure limits policy flexibility. And once systems are embedded, changing course becomes costly and politically difficult. For the UAE, the strategy is working. it has built influence far beyond its size, secured access to critical trade routes, diversified its economy, and positioned itself as a key player in the global competition for Africa. And it has done this quietly, without the backlash that often accompanies overt power plays. The hidden power grab is nearly complete, and most of the world is only beginning to notice. Thanks for watching The Money Timeline.